Welcome to the Explainer. All right, today we're going to tackle a topic that, well, let's be honest, most of us kind of dread: taxes. But this isn't about the headache of filling out forms. Nope. This is about a huge mindset shift, seeing taxes not just as a bill you have to pay, but as something you can legally and ethically manage to build a way stronger financial future.
You know, this quote really hits the nail on the head. We spend so much time and energy trying to make more money, and hey, that's great. But what if I told you that you could give yourself a raise without ever talking to your boss? That's what tax optimization is all about. It's focusing on what you actually keep, and that, my friends, is a game changer for building real wealth.
Okay, real quick, gotta put this out there before we dive in. I am not a CPA, so please don't take this as official financial advice. Just think of this as your educational guide. The goal here is to get you armed with the right knowledge so you can ask smarter questions and have better conversations with a pro who knows your specific situation.
So, first things first, we got to talk about mindset. For most people, taxes are just this thing that happens to them. A bill shows up, it's totally out of their control, and they pay it. We are going to completely flip that script. We're going to start treating taxes like an active, manageable part of your financial plan.
And let's be super clear here, this is not about finding sketchy loopholes or doing anything illegal. Not at all. It's all about understanding the rules of the game, rules that the government itself created. See, they want you to do certain things, like save for retirement, so they actually offer you tax breaks as a reward. We're just playing by their rulebook.
All right, so now that our heads are in the right space, let's open up the toolkit. The government has literally created specific financial tools, these special accounts that are designed to help you legally bring that tax bill down.
The big three you're going to see everywhere are the 401k, which you usually get from work, the IRA, which is an individual retirement account you can open on your own, and my personal favorite, the HSA, or Health Savings Account. Get this, the HSA has what's called a triple tax advantage. The money goes in tax-free, it grows tax-free, and you can pull it out tax-free for medical stuff. It is one of the most powerful savings tools out there, period.
So how does this actually work? Well, imagine your total income is this whole circle. Every single dollar you put into one of those accounts gets kind of scooped out of the taxable slice and moved over to this protected tax advantage slice. So say you make $60,000 and you put $5,000 into your 401k. You're now only taxed as if you earned $55,000. Bam, you've just shielded that money from the tax man this year.
So you've got your tools, but now you've got to learn the lingo, right? And in the tax world, there are two words that are so important, but people mix them up all the time: deductions and credits. And trust me, understanding the difference is going to save you money.
First up, let's talk about a tax deduction. Remember that income pie we just looked at? Well, a deduction just makes the taxable piece of your pie smaller. That's it. So a $1,000 deduction doesn't actually save you $1,000. It only saves you a percentage based on your tax bracket. So if you're in the 22% tax bracket, that $1,000 deduction saves you $220.
Now, a tax credit. Oh, this is where it gets really good. A credit doesn't shrink the pie. Instead, it's a direct dollar-for-dollar discount on your final tax bill. It's like having a gift card you can use to pay the IRS. A $1,000 tax credit means you owe the government exactly $1,000 less. It saves you the full $1,000, no math needed.
So let's just put them head to head. A deduction lowers your taxable income, and what it's worth depends on your tax bracket. A credit, on the other hand, reduces your final tax bill, dollar for dollar. It's basically a coupon. That's why you'll see finance nerds get so excited about credits. They are, hands down, almost always way more valuable.
Okay, we have absolutely nailed the basics. You ready to get a little more advanced? Let's look at a strategy that investors use with their regular taxable brokerage accounts. It's called tax loss harvesting, and it's a really cool way to find a silver lining when the market takes a dip.
So what the heck is it? Put simply, it's about turning a losing investment into a tax win. Let's say you've got one stock that's done really well and another that's not so hot. Well, you can sell the loser to officially realize that loss on paper. Then you can use that loss to cancel out the gains from your winner, which means you'll owe less in taxes.
It sounds kind of complicated, but honestly, it breaks down into 3 simple steps. First, you sell something that's in the red. Next, you use that documented loss to offset the gains you made on your winning investments. And the result? You save money because you've lowered your overall tax bill on your profits. It's a really savvy move.
So this really begs the question, and it's something you should be asking yourself, especially if you have money in a normal brokerage account, one that's not for retirement. Could a strategy like this be working for you?
It's definitely something worth looking into, or maybe even bringing up with your financial advisor.
Okay, wow, we have covered a lot of ground. The mindset, the tools, the important vocabulary, and even a pretty advanced strategy. So what now? How do you actually put all this knowledge into action?
Look, if you take away just one thing today, I want it to be this. You are in the driver's seat. Taxes are not just something that happens to you. By using those tax-advantaged accounts, by understanding that credits are king, and by maybe, down the road, exploring advanced strategies, you can actively manage your tax bill and keep way more of your hard-earned money.
So let's end on this one. Final, really practical thought. Don't feel like you have to do everything all at once, because that's overwhelming. Instead, just ask yourself, what is one small thing I can do this week? Could you maybe bump up your 401k contribution by just 1%, or maybe finally open that IRA? These small, consistent steps can lead to absolutely massive savings over your lifetime.
And hey, if this got you fired up and you're ready to learn even more, we've got the full strategy guide linked right below for you to check out. Thanks so much for tuning in.